Friends, we often say, buy gold in troubled times. But what exactly counts as troubled times? We used to think war meant troubled times. But now we've discovered that when a system's credibility starts to collapse, that is the real chaos. Early this morning, gold surged to $4,608.8. This isn't just a price, it is an alarm bell. Think about it. Since 2024, gold has broken historical records nearly 100 times in our lifetime of investment experience. When have we ever seen anything like this? Let's first dig deep into the fuse that has got global markets trembling. The U.S. Department of Justice is investigating Powell, ostensibly over the renovation of the Federal Reserve headquarters. But friends, at our age, how much have we seen? We all know in our hearts, this isn't about renovating a building. Powell himself said it is unprecedented, a direct threat from political forces against the Fed's independence. Why threaten him? To pressure him into cutting interest rates. Listen carefully. This is an extremely dangerous signal. When a country's monetary policy is no longer determined by economic data, but coerced by political struggles and criminal investigations, that currency has lost its soul. Market analysts are now all talking about the Sell America trade. What does this mean? It means global big players, central banks of various countries, sovereign funds, they're starting to worry. If the Fed is no longer independent, is the US dollar still the safest asset in the world? This deep concern has pushed risk aversion sentiment straight to its peak. Spot gold briefly broke through $4,600. Silver surpassed $86, both setting new all-time highs. This isn't investing. This is fleeing for your life. Capital is escaping from the credit system to physical assets. We've always loved saving money the most. Everyone works hard their whole lives, and the Taiwan dollars or US dollar fixed deposits we save up are essentially a form of creditors' rights. You lend money to the bank, and the bank promises to pay you back. But if there is a problem at the source of currency issuance, if the US dollar is no longer trusted by the world, what will global prices look like? Escalating geopolitical tensions plus rate cut expectations have caused gold prices to break records multiple times in less than a month. The logic behind this is actually that everyone's sense of uncertainty about the future has reached its peak. Everyone must pay attention to one piece of data. HSBC pointed out that as debt problems intensify, gold prices could reach $5,000 by the first half of 2026. What does $5,000 mean? This means the current $4,600 might just be halfway up the mountain. Julius Baer's head of research Menke also said, although it looks a bit high in the short term, in the long run, global central banks are steadily buying gold plus governments' bottomless debt levels. This is the strongest support for gold prices. Friends, have you noticed that recently many fund products related to gold and silver on the market have been adjusting their operating mechanisms one after another? Some have suspended subscriptions, some have adjusted pricing, and some have even implemented temporary trading halts. What message is this conveying? This indicates that market volatility has become so severe that even fund companies are scared. When the premium rate in the secondary market keeps rising, it shows that everyone is already scrambling like crazy, driving prices to deviate from actual value. The fund companies are strengthening risk management and also protecting investors. But this also tells us that if you are only now thinking about rushing in, you might have to pay a higher price. I want to share a concept with you all. At our age, what we pursue is not quick profits, but the inheritance and safety of wealth. Gold has never become worthless paper throughout history, but currencies have. In the past 100 years, countless currencies around the world have disappeared, or their purchasing power has depreciated by 99%. But gold is still that shiny golden gold. When America's internal power struggles start affecting the foundation of its currency, the dollar assets in our hands become castles on the sand. Many people are asking, can we still buy now? Is it at a high point? I want to tell everyone, when looking at gold prices, you can't just look at the quoted price. You need to look at the global credit environment. The current environment is ongoing geopolitical conflicts. escalating great power rivalry, and America's debt interest has already exceeded its military budget. Under these circumstances, the dollar can only reduce its debt burden through interest rate cuts. And rate cuts are another form of erosion to currency purchasing power. So the rise in gold prices isn't because gold itself has become more expensive, but because currency is shrinking. Let's talk about silver. Again, silver rose 7.33% this time, quoted at $85.16. In our financial circle, silver is called poor man's gold. Its volatility is much greater than gold. When gold gets too expensive and people can't afford it, money flows into silver. Silver not only has safe haven properties, but also industrial demand. If gold really heads toward $5,000, silver's explosive potential could be even more stunning. But I also want to remind everyone, silver's fluctuations are huge. If your heart isn't strong enough, or if this money is living expenses you'll need soon, don't blindly follow the crowd chasing those high-premium silver products. Listen up, everyone. This next point is the most crucial. We investors are now facing dual pressures. One is global inflation. Two is the fluctuation of the Taiwan dollar exchange rate. If the US dollar's credibility really gets damaged by this political investigation, the Taiwan dollar won't be able to stay unscathed either. This is why we need physical assets to hedge risks. You don't need to convert all your money into gold, but your asset portfolio must have this safe haven. I often tell my friends, financial management is like planting trees. What we're planting now are seeds of hedging. When the storms and waves come, this gold is your ballast stone. HSBC's prediction of $5,000 is actually giving us a psychological expectation, telling us this big show isn't over yet. The investigation of Powell is just the first domino in the collapse of the dollar's credibility. In the future, we might see more political turmoil or even more intense market volatility. Many elders might think, at my age, what does gold going up or down have to do with me? Actually, it has a lot to do with you. Your pension, your medical expenses, the red envelopes you leave for your grandchildren. The purchasing power of every single penny is closely tied to the current precious metals market. If gold prices keep breaking records, it means price increases may continue. We can't just keep our heads down saving money. We also need to look up and watch the road. In our channel's philosophy, stability always comes first. Now, fund companies are frequently adjusting rules, which is a warning about risk. When you are making trades, you must pay close attention to the premium rate. If you buy a product that is priced 10% higher than the actual gold price, you've already lost 10% from the start. Rational investors should look for channels with transparent mechanisms and reasonable premiums. Have you ever thought about why central banks keep buying gold? They have access to the most professional economic data and intelligence in the world. Even central banks are reducing their US Treasury holdings and increasing their gold reserves. This is the strongest indicator of market direction. Since 2024, gold prices have broken records nearly 100 times. This is no coincidence. This is a collective action of global wealth redistribution. In the next 6 months to a year, we may witness more history being made. If gold prices really rise to $5,000 in the first half of 2026, it means the global monetary system will undergo an unprecedented restructuring. Can the US Federal Reserve maintain its independence? How will the judicial investigations end? These are all swords of Damocles hanging over the market. For US ordinary investors, the best strategy is staying still to counter movement. Don't rush in on the day of a surge, and don't panic during a pullback. The long-term logic for gold is very clear. As long as debt isn't resolved, gold prices won't stop. The current $4,608.8 merely reflects the current panic. If debt problems spiral out of control in the future, gold's value can't even be measured in numbers. Friends, after chatting with you all so much today, I really just want to convey one core message. The world has changed, and our investment thinking must change with it. Stop blindly trusting single currency assets. The Powell investigation has torn off the fig leaf covering the dollar's credibility. We need to learn to follow the smart money, follow the central banks, and buy the most secure insurance for our wealth. I've also observed that recently, it is not just gold-silver ETF inflows have been surging too. This shows the market is looking for any exit to escape currency devaluation risk. But everyone must remember, the crazier things get, the calmer you need to stay. Fund companies' temporary trading halts and adjustments are helping everyone cool down, and we need to learn to think calmly too. In future videos, I'll continue to track this Federal Reserve power struggle for everyone, as well as its subsequent impact on our wallets. This is a long-term battle, and what we need to do is stay patient and protect the fruits of our lifelong hard work. Financial management isn't about getting filthy rich, but about maintaining dignity and the power of choice at all times. Finally, I want to summarize today's key points for everyone. First, gold prices broke through $4,608.8, and silver stood above $85.16, marking that the world has entered an extreme risk aversion mode. Second, the U.S. Department of Justice's criminal investigation into Powell is a major turning point in the history of dollar credibility, and the shaking of the Fed's independence will continue to support gold prices. Third, the $5,000 target predicted by major banks is not out of reach, and the long-term logic remains solid. Fourth, in terms of operations, be wary of product premiums. Don't blindly chase highs, and learn to build positions in batches, friends. On the road to financial management, we need to look not only at immediate gains, but also at long-term trends. Gold is the indicator that allows us to see the future clearly. If you find today's in-depth analysis inspiring, please make sure to subscribe to our channel and click the little bell next to it. This way, whenever there is a major change in the global market, I can bring you the most reliable analysis at the first moment. That is all for today's content. Thank you all very much for your patient viewing. I'd like to hear everyone's thoughts in the comments. Do you think gold can really hit $5,000 this year? How much gold do you have in your current asset allocation? Feel free to leave comments and discuss. Let's together, in this turbulent era, protect our wealth and safeguard our peace. Thank you all again, wishing everyone smooth investments, good health, and a happy mood. See you next time.